Retirees face a brutal choice. Needing guaranteed income right now usually means locking up your life savings while the clock ticks down. Most fixed indexed annuities enforce a strict waiting period. You hand over your premium, and they ask you to wait 5, sometimes 10 years before the income features actually earn their keep. The Trellis Financial Perennial 10 is built to bypass that delay. On the very first day your contract takes effect, this annuity credits a massive 34% bonus to your account calculation. Then, instead of making you wait a decade to use it, the contract lets you turn on lifetime withdrawals as early as 30 days after issue. Handing out a 34% upfront bonus and allowing almost immediate withdrawals seems like a fast track to bankruptcy for an insurance company. To see the arithmetic making this possible, we have to look at the research from the independent analysts at diversified insurance brokers. They take these contracts apart to the dollar, and the mechanics of this one rely on a structure called the two ledgers. This diagram shows how the Perennial 10 operates. On day 1, the insurance company splits your initial deposit into 2 completely separate tracks. The first track is your contract value. This is your real money. It earns interest tied to a market index, it has principal protection so you don't lose money when markets drop, and it is the actual cash your beneficiaries inherit. The second track is your benefit base. This is a mathematical phantom. It has no cash value, and you can never withdraw it as a lump sum. Its only job is to determine how much annual income you receive. That massive 34% day 1 bonus applies exclusively to the phantom benefit base. Your actual contract value doesn't get a dime of it. If you choose to delay your payouts, that phantom base continues to grow, adding 10% of your original premium every single year for up to a decade. When you finally flip the switch, your annual payment is calculated by multiplying that inflated benefit base by a withdrawal percentage tied to your age. Every year you get older, that percentage climbs higher. The company can afford early, high payouts because the bonus is strictly an income multiplier, locked inside a ledger you can never cash out. Funding that early income engine requires strict trade-offs on the actual cash side of your account. Looking back at the ledger, you can see the first cost, an ongoing annual fee for the income rider. While you receive guaranteed payments, that fee is continuously deducted from your real contract value. You also face a 10-year surrender schedule. You can withdraw up to 10% of your contract value each year penalty-free, but pulling out more than that early on will trigger substantial charges. If you are married and elect joint income to cover both spouses, your withdrawal percentage drops. Crucially, the math is based entirely on the youngest spouse's age, which lowers the payout further. When you pass away, that inflated benefit base vanishes forever. Your heirs inherit the actual contract value, which will likely be heavily depleted by years of withdrawals and annual fees. The Perennial 10 is not designed to grow your wealth or leave a large inheritance. It is a highly specialized machine built to pump out guaranteed income right at the start of your retirement. If your absolute top priority is securing a fast-tracked lifetime income stream within the next 1 to 3 years, this product is highly competitive. But if you need aggressive portfolio growth, unrestricted access to your entire life savings, or you plan to leave a large financial legacy to your children, this contract will disappoint you. Buying complex financial instruments based on flashy marketing percentages without tracking the underlying mechanics locks your money in the wrong structure. That is where an independent fiduciary like Diversified Insurance Brokers steps in. They ignore the sales brochures and run the raw, specific math for your exact age, timeline, and financial goals. This graph illustrates their process. They model the Perennial 10's specific payout metrics against over 100 competing carriers to objectively identify the highest possible income yield for your exact profile. Because they aren't tied to a single insurance company, they will tell you exactly when the Perennial 10 makes sense, and they will steer you away the second another contract offers you a better return. Securing your retirement requires matching the right mathematical engine to your personal timeline. Connect with Diversified Insurance Brokers for a second opinion quote review and make sure your income is guaranteed before you turn it on.